This is the Average Guy Network, and you have found Financial Tech and the Guide Rock Capital Management Commentary recorded on October 22nd, 2013. I'm your host, Jim Collison, broadcasting live from the Gallup campus here in Omaha, Nebraska. And of course, we post the show with the show notes and the written commentary each week out at theaverageguy.tv. Financial Tech brings you the latest market commentary from the award-winning Andrew Hunt, CFP and president of Guide Rock Capital Management, located right here in Omaha, Nebraska. If you'd like to receive a free copy of the written commentary in advance, or if you have questions or comments that we can read and answer on the show, send Andrew an email, andrew_hunt@guiderockcapital.com. Andrew, we survived a financial apocalypse last week. How are you?
I am well. I'm glad to be here. Happy Tuesday, everybody. Happy Tuesday to our listeners. Well, I don't know about you guys, but shows like The Curse of Chucky, Scream 2, Final Destination 5, Freddy vs. Jason, you know Halloween is nearly upon us when you can't surf channels without exposing yourself to or relishing in a multitude of horror flick sequels. I'm not a big horror flick guy, so I tend to run the other way. But propagating alarming situation seems to be all the rage in Washington, too. Last week, a last-minute deal raised America's debt ceiling, saving us from a debt default and ending the government shutdown until next January. In the meantime, hoping to avoid a sequel just 3 months down the road, the members of Congress agreed to put their heads together and produce a 10-year budget plan by mid-December. Like the hero or heroine of many a terror-filled fantasy, stock markets generally have proved resilient despite facing formidable challenges. Just last week, the Standard & Poor's 500 index hit an all-new high. And according to Barron's, quote, since the rally began in March of 2009, there's been a flash crash, the Greek default drama, the U.S. debt ceiling debacle, the S&P credit rating downgrade of the U.S., the sequester, and the Great Taper Scare. Each of these, we were told, could have ushered in a new bear market. Instead, the S&P 500 squirmed out of the traps and headed higher. And for its latest trick, the market had to avoid the double whammy of a government shutdown and a potential default, end quote. The short-term resolution of budget and debt ceiling issues doesn't mean markets have escaped the insert your villain here, an axe-wielding maniac, a flesh-eating demon, or a stay-puffed marshmallow man quite yet. Looking ahead, you'll have to confront the menace of potential contentious budget negotiations, the possible end of quantitative easing, and, of course, the phantasm of resolute fiscal policy. So we'll see what happens. We'll just keep you guys updated. Of course, it's probably the holy grail of investing if you could accurately predict how share prices would move. You'd probably be pretty stinking wealthy. If you could offer insight that helps analysts and investors do a better job predicting such things, you might even win a Nobel Prize. And that's what happened when American economists Eugene Fama, Lars Peter Hansen from the University of Chicago, and Robert Shiller from Yale University jointly received the Nobel Prize in Economic Sciences. They were recognized for their empirical analysis of asset prices. In fact, a lot of what our modern portfolio analysis and asset allocation analysis is based on the work that these guys did 30 years ago. So I wanted to share with you guys what exactly their research said. So Fama is best known for his work on the efficient frontier, which demonstrated stock prices are extremely difficult to predict over the short term because new information is incorporated into prices very quickly. His research not only influenced future research, but many accredit the emergence of index-linked investments to his theory. Robert Shiller, a student of behavioral economics, challenged Fama's efficient market hypothesis with the belief that markets are driven by human psychology, which can and does create large sustained price errors. Shiller established when the ratio of price to dividends for stocks is high, prices tend to fall, and when the ratio is low, prices tend to increase. And then Lars Peter Hansen Well, he developed the Generalized Method of Moments, or GMM, which proposed a straightforward way to test this specification of a proposed model. Hans's work is instrumental for testing the advanced versions of the propositions from Fama and Schiller. If you want to do serious analysis of whether changing risk Permia can help rationalize observed asset price movements, Hanson's contributions will prove essential. According to the Nobel Prize Committee, there's no way to predict the price of stocks and bonds over the next few days, but it's quite possible to foresee the broad course of these prices over long periods, such as the next 3 to 5 years. The laureates, the three that I just mentioned, have laid the foundation for the current understanding of asset prices that relies in part on fluctuations in risk and risk attitudes, and in part on behavioral biases and market frictions. Really cool stuff. Those of us that have studied this stuff in academics know these names, and of course we mention these names, Schiller Home Price Index, for example, almost weekly on this show. So here's our quote for the week. Many men go fishing all of their lives without knowing that it is not fish they are after. And that's from Henry David Thoreau.
Andrew, very good. I want to ask you a question as we get ready to get towards the end of the year. What are some things folks can be doing to kind of prepare themselves for the end of the year? I mean, there's a lot. We have taxes come in January and February, but what are some things the typical person could be doing right now to get themselves ready for the end of the year financially?
Yeah, great question. Well, it's been a good year in the markets. There's probably not a lot of losses unless you're holding bonds and things like that. And so typically at the end of the year, you'll sit with your advisor and work with them and think about doing something called tax loss harvesting, which is simply saying, hey, we're going to take some of our losses to offset some of our gains. We're going to realize those by selling or buying, depending on what your strategy is. So that's an important thing to have a conversation with your advisor about, to position yourself for taxes at the end of the year. But then also, you might consider rebalancing. I'm a big fan of rebalancing, and some folks do it once a year, some folks do it quarterly. Again, work with your advisor on that, but it might be a good time to consider doing that, getting your allocation back to what you originally intended it to be by rebalancing. Those are two really practical things you can do. The other thing is goal setting. I'm a huge goal setter. We try and goal set with all of our clients. I do it personally. What a great time of year to think about 2014, think about your goals, think about the things you want to check off, and laying out the plans to get there and make sure that you accomplish that. So that's my advice.
With everything that's been going on in our government, and this is kind of going to be a U.S. question because of the taxes that we pay here in the U.S., any changes that you're aware of coming up in our tax law? I know there were some big changes last year that kind of delayed things in the first part of the year with folks doing their taxes, but anything you've heard of coming out that folks should be aware of?
No, I haven't heard of any really big changes that are going to affect the average Joe. Most of the tax laws that were put in place last December are continuing to carry forward. So I don't foresee any big stuff for the average Joe.
Yeah, those guys are too busy trying to just balance the budget or get the bills paid.
Just paying the bills, yeah.
at least they are paying the bills. Speaking of paying the bills, if you're new to podcasting and you'd like an easy way to listen each week, we have an easy way for you to do it. Consider using Stitcher, available on any browser as well as both Android and iPhone platforms. It's a great way to listen to the podcast at home and on the road and now in your vehicle. A lot of brand new vehicles are coming preloaded with Stitcher. This show and all the past shows are on Stitcher. Stitcher.com. Search Financial Tech. It's education for your ears. And be sure to visit Guide Rock Capital at guiderockcapital.com. Follow Andrew on Twitter. He's just at Andrew D. Hunt. And get all the show notes to this show out at theaverageguy.tv. Now, Andrew and I say thanks for listening. We'll catch up with you next week. Remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.